What's up, Stephen Johnson stocks? Best month, second best month of all time, $13,000. My best month ever was 15,000 in April, followed by 10,000 in March. So that's this year three absolutely mind blowing five-figure months this year to top off what is now 58,000. And ultimately, this is not about me; it's about we. So how can I pass on these lessons to you guys? Well, the three record months all have something in common, and that's that I was cutting losses at 1%. I was cutting losses, sometimes not even based on percent, but based on time. If it didn't do what I wanted at that time when I was in short, I would just cut it. And if that means getting in and out 100 times and having $100 or $200 commissions, then that's okay, because I'm still making the $1,000 1,500 days. I've had a record-breaking $9,000 days this month, and I've had a record $4,500 week, even though my commissions have been high, even after the commissions come off. Just getting in and out as many times as you need to, not being mental, but getting out when it's wrong, because you don't want to get sucked in to that trade. The other thing that made this month extra special is that I'm a simple guy and I've got one pattern and it just works over and over and over this year. But somehow something clicked with shorting the parabolics, the daily parabolics, like on the EV sector. We've seen it on weed, we've seen it on Bitcoin, but I really nailed, like about a good $5,000 this month came from shorting the EV sector, and I really nailed it. And some kind of higher price stocks I'm starting to get. So me trading is really evolving and getting to the next level, but all the lessons are in, check it out. So the month for the recap's pretty solid. I think it's a record of how many $1,000+ days I had, and that's a sign of sizing up. So I had like 1, 2, 3, 4, 5, 6, 7, 8, 9. About I had nine days above 1K, which is really good. Again, sizing up. I did take the red loss, but I mean, look, they are equivalent. It's 1 day's work essentially. Sometimes I had a record week in November of 4,450. That's the most I've ever made in 1 week. So sizing up is working. I'm having like a record 13K week. But what I am conscious of is, as I continue and the market slows down, I've just hit a 2.5K loss in December, which is not the end of the world. I mean, look, I'm looking really well with 9 green so far, 3 red. I'm positive this will be green anyway. It'll be 10 green, 2 red, and me average winning months are significantly higher. This will be up again after this month than the red months, which are all like $1,000 ish. So on the months scale, I'm doing really well. But a consistent theme that I'm experiencing is that although I'm winning like 90% of days, and even sometimes I win 100% of days, I mean, that's good, but I still don't think that I mean, in a way you say if a strategy's not broke, don't fix it. Like if you've got $600 into what's hopefully going to be 60K this year, but just short of 10,000% ROI, when you've got that return, you really want to change your strategy. And it's a difficult one, but I think ultimately I need to make sure that my average winners are bigger than my average losers. I don't like this, all right, well, you win 90% of the time, but when you lose, it's pretty terrible. Like, I don't want to have these terrible days. So I'm going to be working as a priority, especially coming into December after this loss. And this was like 1.9, but then I lost on a couple of other trades as well. So it wasn't like 2.5 loss. It was $1,000 plus loss, and then I lost on a couple of other trades after. But my focus is going to be completely on for December, and I think next year, is to make sure the average winner is bigger than the average loser. Now, charts like Wise are really concern me, because it's a mistake I'm repeatedly making on very similar charts over and over. And I've took some bad losses as a result. I mean, stocks like WISA, it's gapped and failed. It's a terrible chart. We've got a history of it failing. It's traded volume, like it's everything that I would like to short. And it looks like a good short, and I mean, to a degree, it was a good short. I mean, if you'd swung this, you would have got it over the night. The problem is just the volume was a bit too high, which made it just a bit tricky, and it's these stocks that just won't break down. I mean, if you look at quickly just how I traded it, and we can say I'm battling it, like shorting the tops, covering the bottoms, like good trading, but I just, when it doesn't break down, I don't let it go. I follow it all the way up, lose discipline. And it's a tough one because this stock should fail. It's got a history of failing. I'm not, it's failing pre-market. I'm not against these shorts. The problem is that when it doesn't break down and we get the higher lows and we get the, ultimately what it's been working towards all day, this ascending triangle break, even when it breaks down and fails, even though this failed and I could have got out break even, by that point I'm sucked in, and so is every other short. And this, like most of the time these kinds of shorts will break down, but it's when they don't break down that's the problem. And I'm thinking that when this move fails, it's finished, but what I'm failing to see and realize is that this is the first part of the move and this is the second part of the move. So as long as it holds the highs of the push, that's not breaking down, that's just a rip to the upside, and then it's holding for the next move. It's just making higher lows and stair stepping, which is incredibly bullish, and you do expect this to break down because of its past. And it does break down because it isn't anything special. It just caught a bit too much volume that day. But I basically need to just let these types of charts go when they're not breaking down by like 10 and 11 o'clock, because if anything's holding into the afternoon, it's just a struggle. And I mean, I made the same mistake on Lizzie's, same chart, exactly the same chart as Wiser effectively. Looks like a good short. It's kind of like a multi-day breakout, but it's got too much volume, same as Wiser, too much volume. But you've got it's showing signs of breaking down. The opening candles, it's showing strength, showing volume, but what tricks everyone, and it gets me, and it's got me every time, but I need to learn to avoid this pattern and print a few of these off. You've got some nice shorts, shorting the push, following it down, but it's when it's the same thing, the higher lows, the ramp up, the triangle break. They all do similar variations with similar structures of the same thing, and I'm literally like longs. There'll be longs who are following this pattern to a T, looking specifically for gap and craps that just have that too much volume and are just setting up this intraday structure to squeeze. And Lizzie was the same mistake. I made the same mistake on Lizzie and Wiser. It's the same structure. It's these bottoms, these higher lows that hold, and it sets up for the second move, which ultimately falls apart, and I got away with that. But it's PPSI as well. It's this was the recent loss that I've just took in December, and it's again like this is a textbook short setup for me. But for whatever reason, just a bit too much volume came in, and we get this structure where it's about 7 million pre, and this one squeezes a little bit higher, but it's the same kind of structure. It doesn't break down by 10:30. We get the top to short into, but we hold the double bottom, we hold the higher low, and then we get this squeeze up, and then you think it's the end, but it's not. He has the second part of the move that's starting to form. When this doesn't break down properly, it's like a really nice 10:30, 11, 12 buy to get the second push, and then again it fails. Like they've all failed. Wiser, Lizzie, and PPSI are the same chart 3 times over with the same daily as well, in similar volume characteristics and similar fundamentals. None really being great companies with any promise or too related to a hot sector. I know this is kind of semi-electrical, so it's semi-hot, but the EVs are all coming down, so it's not. So I've really got some work to do to really, because I'm doing great, like I'm really doing well with me trading, But there is a key difference in PPSI, LIZI, WISA. There's a key difference in them all. These are different to the other shorts, and these are the ones that are consistent. These are the only ones I lose on. Whenever I take a loss, it's on this specific structural setup, and I'm realizing it right now in front of you guys, and it's mind-blowing. I just need to print these off and save them and get these on a wall. So this record $4,450 week started with just an $800 day, but it was mainly focused on the EV stocks, the backsides of the EV stocks. So we can see Solo, Blink. A lot of these are on the guide that I've just done. Solo, Blink, and AYRO I kind of lost on, but I took a little bit on DPW and MDGS. But we'll just look at Solo because we're going through quite a few days. So Solo had this big rip up. We saw the front side. I did take some front side shorts, did make profit, but it's when the pendulum turns when you got this blow off top wick, first red day. I mean, guys, we've seen it all a million times, but it's just how do you play it? And we saw this big overextension, the crack, all signs that it might finally be done. And after that, it was just a case of like, well, where did it close? It closed in the 11s. And then you're just trying to find, you're hoping for some sort of push into green red, just to take that short. And if we check the Solo short, we can see a really nice trade as it pops up. I'm a little bit early a couple of times, but I really get me money in at the right time on that red green level. Hammering red green, covering the rips, shorting the rips, covering the dips, shorting the rips, covering the dips. Nice cover down in the 950s before hitting it again in the 10s. And the only mistake I really made is, I mean, I kind of just left it, right? I mean, I did all right, but I feel like I just left it. And then the actual big drop came the next day, and I should have been chasing this down. It's the backside. It's confirmed the backside. We've kind of like made $1,000. I've took from like 11 to 10. I've took 10%, and then it drops. You get the big drop the next day, and that's disappointing. Like because this was almost the like, is it going to drop? Is it not? And then this, when this confirmed, I should have been chasing it down because it's extremely bearish. And like, I just fucking love this shit. Like, do you know what I mean? Because so Solo was the first, for me, it was the first EV to fall on the 23rd. Then it had the big day on the 24th. But Blink had its final push on the 23rd. And then Blink, and I think really the rest of the EV sector, then fell on the 24th. So I'd banked on Solo. Like, I'd caught the first one to turn. And then with BLNK, they were all starting to turn. When I checked the scans, every one of the EVs was red. So then it was a case of like, okay, we've had this parabolic push-off day. It's time to get Blink. The first after hours line had failed. Then it had topped out and failed again. So for me, I was just really interested in like this little triple bottom descending triangle. And I was thinking, this looks pretty done now. And again, it was like, it was a good, I mean, I wouldn't really say a sweep up day, but it was a good like 1400-ish day, predominantly captured through Blink, and again, really not played perfect. When we look at Blink, we can see that's the triple top failing in that area there. I'm shorting as it breaks down, and again, it's like, it's short and support, right? But it's short and support is the overall big picture, the magnitude of a bullish, huge, one of the biggest moves in my stock market history. It turns, and when that pendulum turns, you don't have to be too precise about your entries. It's about getting in. So caught that turn on the short, covering, shorten, covering, shorten, covering, shorten, and I took it off a little bit earlier. I actually missed the big drop down to the 24s. And then the biggest mistake I made was not having more follow through, not having more conviction. We just saw what happened to Solo that next day. So with Blink, you've got a couple of days of this being bearish once it turns, and that's what I kind of didn't realize. So if we kind of even try to look at like Blink, we've got this extra short here, and then this extra short all the way down. There's like 30 down to 26, and then I even did take a little bit of the last short, but I'm more curious about what it does the next day. And the next day we've got like, again, like one final push up into this support level, and that's arguably an easy short. And then this all day fade after it double tops is another easy short, and it's about taking advantage of ultimately what was the drop from the 33s to the 25s. I mean, I really only took like 30 to 28 or something like that. Like I really could have played these a lot better and a lot more, and that's the learning for me, yeah. And this was just the cherry on the cake. This was on the 27th of November. Works just took 1.6k on a day that was a bit quiet after the EVs had filled in. And honestly, when I talk about 600 into 58,000, it's like 97, 98% from this pattern. I don't know any other patterns. Like, what is so exciting for this year and going into next year is like I'm learning how to short these, like catching those EV parabolics. That's the first time I've ever done it. It just all clicked, and I was just like, fuck, I can't believe I get it now. So really, when I talk about bread and butter, like this is where 98% of the profits come from. EV was just a new learning, but these charts, and again, this chart is exactly the same as LIZA, PPSI, the same as, what was the other one? The name escapes me, unfortunately, but it's okay. Works is the same, but the difference between Works and the others is Works did break down. So again, we've got these higher lows. We've got, it's all the same. We've got this ascending triangle to the break, but the difference is this doesn't break down. This doesn't have the higher highs. This doesn't hold together. So what we end up having is this head and shoulders. Very weak shoulder, arguably a stronger shoulder. What would have happened with the likes of PPSI is we get this level, it moves, and then it holds a higher level here, but we didn't get that. We actually got the breakdown. So if we just look at how that played out, we'll have to go zoom in here because there's so many entries. Me broke our loves is it's my favorite short setup, so I'm hammering it up, hammering it down. I'm kind of covering a bit here because I'm indecisive, taking some off. After trying to hammer it again for the next leg, I don't get it. So you've got a couple of covers here, taking some off, which is what I should have done with PPSI, and it would have been profitable. Then hammering the top, holding, taking some off, hammering the bounce, taking some off. And this is exactly how I like to trade, and I've caught the entire move. I've caught the initial push at the open, covering the dip. I've caught the then little squeeze, covered all the way down. I've left nothing left. Like, there's no meat of the move here. I've captured the entire move. And this is honestly how I like to trade, and there's just, I've got to make the distinction where when there's just got that increase in demand for whatever reason, when the levels hold, even if it's manipulated, I've got to know the difference to get out, and then it'll be a 100k plus year next year. Okay, so thank you so much for watching. I just want to leave you out with three things. One, could have never ever done it without you guys. It's been an incredible year. I remember the first video back in January when I had a $600 account. I've never thought I would have flipped it 10,000%. So it's an incredible year. You can do so much more than you think that you're capable of. Honestly, a 10k month, a 10k year was a dream for me, let alone a 13 or 15k month, and to repeat it 3 times to show it's not luck. You can always do more than what you think, and you never know when you're on the edge of success. Like last year, I was like, I think I'm getting this, and you won't know that you're getting it, but the profits will come, or you will start losing less, or your winning percentage will go higher. So the numbers will show that you're getting it. Sometimes in your head you can't know. Like, I still don't really think I've got it, but then I'm like, well, I've made 60 grand and it's come from somewhere, so I've got it. Do you know what I mean? So just watch the profits, watch your winning percentage. That will guide you to profitability. Second, I give live streams away. I'm doing live streams every day, practically 12 o'clock, check my YouTube, try and look around at 12 o'clock, hit whatever people are saying on YouTube, I don't even know, but there's a subscribe button, you hit some bell, like just hit all the fucking buttons, like it, comment, because you want to get notified when I go on YouTube because it's free live learning every day. And the last thing, after I had this crazy return on investment, I just wanted to get it down in a guide. It was meant to be a couple of hours. It turned into like a 5-hour plus guide. I'm putting a bunch of live streams on there as well. And I was going to sell that on my own, but I thought out of respect I should give it to Tim Sykes and the Stocks to Trade guys, because they are the reason for me success. The challenge is the reason for me success. So there's an outro. This guide should come out in a week or so, but I'm just seeing I mean, for sure, 100% Tim Sykes and Stocks to Trade will push it, but it's through their channels, it's not through mine. So all I can do is like give you an insight into what the guide's about and then see what they do in the next week or so. But I hope you buy it. There's tremendous lessons in there. It's heart, mind, body and soul, and sweat and tears went into that. I don't want to do one ever again, but I'm proud of what I've done. And just thanks, we will not fail, keep living the dream. And that's a wrap. Goodbye, good night, good day. And if you can just do one more thing, just please write to Tim Bone, because he wrote on his Instagram that I'm pudgy and British and have a fake accent. So please, it's all fun, but write to Tim Bone. You will lose the 5,000 meter rowing challenge in October at Tim Sykes' conference. Write it to him on any channel, write it as many times as you want. You will lose the 5,000. Stephen Johnson here, and I just want to talk to you about this 5-hour guide that I've got into one pattern. It's called Stephen's Money Pattern because I've turned $600 into $60,000. It's a 10,000% return on investment this year. The pattern is pretty simple. I literally just short gappers. Anything that's up more than 25%, I'll look down the list and I think which one of these will be a short. Now, of course, if you did that randomly, you would get random results and you would lose a lot of money, which is why it's heavily backed by data, by science. I've analyzed 300 and 400 gappers over a 2-year period, segmented them into various different criteria. So I know not only what to short and what the probabilities are of success, but exactly when to get in and when to get out based on data, because these stocks, history doesn't repeat, but they rhyme. They do the same things. I was kind of a lot, probably what you may be like. I lost all of the time. People used to make jokes to say on Twitter, we'll do the opposite to what Stephen does and we'll get rich. It's a lot different now. We can see in November, I've had a lot of success. Recently a 13,000 month, 11.8 net when the fees come off. Now, the strategy basically just looks at gappers and figuring out which ones are going to crap and which ones are going to go. So the craps are the ones that close 5% lower than the open, and the ones that go are the ones that close 5% higher than the open. Now, if you try and do this randomly without a strategy, you're going to get pretty random results. It's like a coin flip, 64% crap, 19% hold, 17% go. Like, I don't want those odds. I need to apply more filters to have a more successful win rate. One of the patterns that I have is a short into high volume resistance. It's an 81% nearly win rate. Based on specific criteria, only 4% of these go. So if you short any of these pretty much from the open, you're looking at roughly a 96% win rate. It's a lucrative pattern, but you just need to know the criterias. And based on 300 plus examples of gappers, categorized based on volume over 2 years, we can also predict exactly when to get in at the open and when to cover based on statistics, based on past examples, how to get the best edge and the best execution when we're shorting intraday. Now, of course, there's much more than that. We look at things like other variables, SEC filings, floats, the overall market, the percent it's up on the day. And there's chart after chart after chart after chart after chart, analyzing endless different scenarios. And that's it. So in a wrap, it's a 5+ hour guide, mastering one pattern. You get the Excel with it. You can build the Excel, you can analyze it in your own way. It comes with all of the data. We'll give you bonus live streams on top of that. And it's made by not some whiz kid nerd introvert. It's just made by me, probably someone just like you. Please do take a look at the guide and hit me up. If you buy it, I'd love to know your feedback. Twitter, Junk87. Instagram, StephenJunk87. Keep on living the